the market the last 2 days, yesterday and the last I looked, which I haven't looked in before, I looked right before we started recording. It's getting absolutely hammered. What are your thoughts when you're seeing this occurring?
It's a relief to me. I've got about 70% of my liquid assets in cash right now. I'm all for it. There is simply an enormous, a unprecedented level of asset inflation and dollar denominated assets. We're at a peak in financial asset pricing that we have never seen before in the markets outside of 1844, which is the railroad bubble, 1929, which was the auto bubble, or maybe the radio bubble, depends on how you want to try to classify it. And then, of course, 1999, which was the internet bubble. Yeah, I think that before this bubble is deflated, you will see valuation metrics decline by at least 75%. And that is not anybody's dance card right now. So if you want to survive the next decade in US dollar-based financial assets, you want to avoid things that are inherently leveraged because they're going to become deleveraged. And you want to avoid things that are ridiculously expensive. On the other hand, just like in 99, a lot of really deep value stocks are badly mispriced. Berkshire Hathaway is trading at 9 times earnings. Berkshire Hathaway has a priced enterprise value right now of 5. So, if you want to do well for the next decade, maybe you buy Berkshire Hathaway and you sell short something like Meta. But I don't think it's a good idea to buy a business at 35 times earnings that hasn't grown revenues in 4 years. There's never been a time in history where the stock market traded at the current levels that it is, where it didn't see an enormous, very damaging, panic-like sell-off.
There's a reason why the world's best informed investors read my daily journal. Subscribe for free at portersjournal.com.